G'day and welcome to this week's video. My name's Robert Gowdy and back working from home for a few days as things get a little bit tougher in Victoria. One thing that we've been doing for our clients and our clients' children for quite some time is helping them to invest and get that first start when they're making their first investment into the share market. And obviously, we put together a lot of portfolios for small amounts of money, as little as $1,000, $1,200, and up to $10,000 or $20,000. So I thought it'd be worthwhile if we went through a bit of I suppose, what we're doing for these young people, first-time investors, and then put together I suppose, a 5-stock 10,000 portfolio that we've done recently for one of the young kids as their first step into the market. So let's run through, I say, some of the three main things that we do for clients, just I suppose from a education point of view is one, we try to make sure that people are understanding why we're investing into businesses. Why aren't we looking at property? Why aren't we looking at term deposits? They need to understand the why. And one of our key tools there is, the way we educate clients to invest into businesses, to make sure we benefit from the growing value and profitability of these businesses is we use Peter Thornhill's information. He's extremely good at explaining why you should be in businesses rather than cash and property. And there's a course on our website that's there for free that people can go and use, and that's where we send a lot of people. Secondly, we like to own the assets directly in their own name, if we can, and in preference to using managed funds. The reason for that, I just find that if people know the businesses they invest into, that transparency can provide a lot more interest. They can track it on their iPhones, and I think it just provides a lot more see-through and interest to know exactly what you own, and you can watch the ebbs and flows, the goods and bad days, regularly, and I think that can be a bit of fun as well. In terms of the purchasing of the shares themselves, we just use simple online brokerage where children are quite engaged and they want to set up, young adults, not just children, where they'd like to set up their own accounts. We encourage them to do that to help get them to have the full experience of the buying, the setting up, then of the buying, and also the paperwork that happens afterwards. So we encourage them to do as much of them that they can themselves, rather than just us holding their hand all the way through. Now, for a 10-stock portfolio, what would we do for clients? Well, to give you a bit of an idea, we try to stick to very high quality businesses. We're generally not playing in the resources sector. That's something that Peter Thornhill has got plenty of research on, so we're not buying BHP or Rio. So we'll go through the 5-stock portfolio that we've been recommending for clients. And the first one is a business that obviously I'm a shareholder in myself, as I'm with actually all of these businesses, and that is Ripe. So we're buying Ripe. It's based in Sydney, and they're a Microsoft reseller. And whilst it is probably the smallest of the businesses that we recommend, they're reselling Office 365. I've spoken a lot about that. They have no debt. They have about $60 million in cash. So very much a growing business, and COVID and working from home has really increased the use of these products through Microsoft and Zoom and so on. And we see this as a fantastic business, a reoccurring revenue model that we very much like. So Ripe is good for $2,000. The second one is Magellan Financial Group, and this is the business itself. Now, Magellan has, again, no debt whatsoever, probably close to $400 million in investments, in cash and their own investments that they have. So no debts, obviously strong balance sheet, and they've been accumulating funds under management at a really great clip for a lot of years now, and they've also just recently, through great performance, benefited from for the last financial year around $82 million in performance fees. Hamish Douglass, the co-founder, owns probably around 12% of the business. So it's always helpful when the employees, the management, actually own a lot of the business as well. Now, secondly, we're also recommending Magellan's funds. And whilst I suggested at the start, we wanted to try to avoid investing into managed funds and or ETFs and the like, because we like the see-through. When it comes to smaller amounts of money and we want to get our exposure into the international markets, we're using Magellan strategies there. So we would use Chris's High Conviction Fund that he manages with Hamish Douglass. That's Chris Weldon, and within that portfolio you get 10 to 12 of their high conviction picks, such as Facebook, Google, Microsoft, Tencent, Alibaba. A lot of big tech names there which are doing particularly well during this time as people really change their habits and the way that they work and live around these tech businesses. So by investing $2,000 into Magellan, the business itself, and then $2,000 into one of their products, that gives us exposure to an Australian financial and the funds management business, and then investing into, say, the Magellan High Conviction Fund gives us exposure to a lot of the world's biggest and best businesses, such as Microsoft and Google. The fourth business is a business called Altium. We've invested in that for our clients for a good number of years now. Now they have around $90 million in cash. So again, no debt whatsoever. So a really positive thing there. And what Altium do is they're a software developer, and they develop software that electrical engineers use to design circuitry boards. And whilst COVID's had a significant impact on their business, they've still had revenue growth of 10%, and they're still taking on new clients. Whilst their subscriptions are at a discount, I did a video on Altium probably 2 or 3 weeks ago, which will be worth a watch. But definitely a business that we rate has got some strong tailwinds pushing their business model ahead as people, obviously the internet of everything becomes connected. That's more circuitry boards. So Altium has been a fantastic business, trading a fair way from its all-time highs. But yeah, again, no debt, really strong business. And the last one, stock number 5 for another $2,000 is Fisher & Paykel Healthcare. So we do like the healthcare sector for lots of different reasons. But what Fisher & Paykel Healthcare do is it's not fridges and freezers, but it's sleep apnea devices. It's the consumable products, the face masks, the oxygen delivery to help people breathe. And as people get older and as the world gets a bit heavier as well, sleep apnea can be a growing issue. And this business has ran out of New Zealand and has proven extremely strong business and extremely strong share growth as well, particularly with COVID being a respiratory virus. Obviously, a lot of their products have been used with regard to treatment of COVID. So that's the five businesses. One is a more so a managed fund that we like, and the reasons why we like them. They're not all huge businesses like the big 4 banks or our resources, but these are very high quality businesses, and they don't need to be huge to be high quality. Thank you for listening. I hope that's a help. Please subscribe to the channel if you haven't already done so, and that'd be great. Speak to you soon. Bye.